Hello. Good morning. Thanks a lot for joining us. My name is Calvin Kabaso. I want to welcome you again to Takaful Insurance of Africa. I'll be taking you through. I'll be taking you through the Takaful, where we started from, where we are, what we are doing, what products and services we offer, and what makes us unique in this particular market of ours. If I can allow me to just proceed to the presentation. I want to say that Takaful Insurance of Africa was founded in November 2008, and actually, after that, it was actually licensed by the Insurance Regulatory Authority in January 2011. In 2014, Takaful Insurance Company of Africa was actually acquired a license to underwrite both general Takaful and family Takaful products. There actually is including the pension product part of it. And we also licensed to do medical and micro Takaful products in 2015. Uh, we can be asked what what does what what model does Takaful use actually in its operations. I will be able to specify that I hope all of you can be able to see my screen. I hope everybody can be able to see my screen. I'll move to the next slide and say that Takaful model. Takaful means this is a mutual protection and a joint guarantee. And Takaful operates in such a way that the participants mutually contribute to the same fund for the purpose of actually indemnifying anyone who has actually gotten an incident or actually in the event of a peril or a loss. Therefore, Takaful is protected by law actually to enable us to indemnify any person who has actually been affected in case of a peril or any hazard. And we actually do this based on the Sharia principles and guidance as a system of mutual indemnification based on the principle of assistance. This actually is called TAR1. Actually, that's the basis of the principle that we use here in Takaful Insurance of Africa to enable that we run operations smoothly. And there's one major question which usually comes across, and this is actually the element of differentiating Takaful and the conventional insurance company. A lot of questions have come across, and this makes us to identify ourselves strong and bold in the market. And as Takaful Insurance of Africa, we have a Sharia board which ensures that the practices are free from prohibited elements. If you compare this to the conventional companies where they have got no Sharia oversights, which may lead to the involvement of non-Sharia compliant practices, and you'll find that we invest our funds in free interest Sharia approved assets, and that's actually what we practice. You find that the conventional insurance companies invest assets as long as they meet the national insurance regulatory and regulations and laws. Also, Takaful is an element of a sharing mechanism. That's why we got a pool that all the participants share. They contribute to actually indemnify any person in case of any eventuality. But you may find that under conventional insurance company, this is an element of risk transfer. Actually, they're transferring the risk from the insured to the insurance company. I'll move to my next slide. And when you look at the element of contribution, as Takaful, we actually treat this one as a donation. And under the conventional insurance company, the premium paid creates an obligation against the insurer on a sale and purchase agreement. If you can be able to skip to the next slide of what products do we offer both general products, and we do medical, we do IBLT. These are index-based livestock, and also we do pension. If I can be able to expand on the general insurance products, we do motor insurance covers. We do liability covers, these including the professional indemnity, the WIBA, public liabilities, employers liability, directors and officers liability. We cover product liability. We also do, under the motor, we do motor private, we do motor commercial, which have actually been divided into various sections. We do the miscellaneous classes, we do fidelity guarantee or risk, uh, burglary, and actually we also do a medical cover, which is wide and bold, which will be able to be explained by my colleagues in the next presentation. We do the pension part of it. Having said all that, I can be able to say that we are open and we are open for the mutual benefits. We want to invite you to join us into this particular great family. To be able to come to conclusion for my slides, I want to hand over to Mr. Andrew Dwati to be able to introduce us to the next presenter. Thank you, and thanks a lot for listening. You're most welcome. Andrew, please. You're most welcome.
Thank you, Kebaso. That was timely. We will now have Mr. Mohammed to share our concepts and also now to come back to us and share the model and a few other items. Bwana Mohammed, please take it away. Kindly unmute for us. There you go.
Okay, good morning and salamu alaikum. I take this opportunity to welcome you to this webinar. As my colleagues have said that I will present to you our model. We call it the business model, which we apply so that to understand it, how we operate as a Takaful Insurance of Africa. And it is my hope that at the end of this presentation, you'll be able to understand the Takaful Insurance of Africa model and how it is applicable at this organization. So in summary, this is the model which we apply, presented in graph. But we shall expand this one when we give an example of a customer who has approached Takaful for a cover. But before I go to application, our explanation how we apply this, how we operate, let us just have an overview of Takaful, even though it has been mentioned, but I want just to give a brief definition of Takaful. As you have seen from the screen is that the word Takaful is derived from an Arabic term which means kafala. And kafala means help one another, taking care of, or guarantee. So this is the concept of Takaful. We help one another. When we join together in the organization as a participant, we help each other or one another. And also we take care of one another. At the same time, Takaful operator take care of the funds which belongs to the participants. And also guarantee in case of any claims which is paid to the participant. So this is the literally meaning of Takaful. But from the technical meaning, as has been given by the office standard number 26, sorry, which state that Takaful scheme as a Islamic insurance is a process of agreement among a group of persons to handle the injuries resulting from a specific risk. So these are the group of people who come together to form a pool. And in that pool, the fund is used to indemnify or to pay compensation for any among the participants who face injuries or risk. At the same time, the fund is also invested in Sharia compliance. So this is just briefly explained in these 4 diagrams. Number 1, which is show the participants who come together to form that pool. They pay their contributions, and these contributions are used to compensate any among the members who faced any calamities or perils. And also, Takaful operators is representing as an agent who manage the funds, paying the claims, at the same time investing the funds. And the indemnification to pay the claims to those people to those participants who has been affected by the calamities. And the last part, it is the investment. So the funds are investment in Sharia compliance. So this is just a brief process of Takaful insurance. Now, let us just have an example of a customer by the name of Ben who come to Takaful of Insurance of Africa for a cover. So he presented a question by saying, how does motor private Takaful work? So our staff explained to Mr. Ben that you are supposed to sign an agreement we call the policy agreement plus the proposal form. Then, after signing those documents, he entered into an agreement with the Takaful operator in order to form that agreement as an agent, because Takaful operators will be appointed by the participant to manage those funds on behalf of the participants. Then, in order to form that pool, Mr. Ben is required to pay certain amount of money, although it is for the purchase of the cover, but it is a contribution, because part of that contribution will be paid to Takaful operator as agency fee, and the other funds is put in the risk funds, whereby it is used for indemnification. In case of any peril, the customer will be compensated by that fund. So from there, you have understood that portion of the funds is taken by Takaful operators as agency fee, because in that policy document, the customer has agreed to appoint Takaful operator as his agent to manage that funds. And in Sharia wise, it is allowed for any agent to charge a principal certain amount of money for doing the work on his behalf. So in this case, Sharia has allowed Takaful operators to take certain amount of that contribution in order to manage those funds and also to work on behalf of Takaful, on behalf of the participants. Then Mr. Ben still continue to get more information about how those risk funds are used, called General Takaful Risk Fund, which is now put there in order to indemnify the customer. So we tell Mr. Ben that the portion of his contributions, let's say 50% of the contribution has been taken by Takaful operators, and the remaining, which is now 50%, will be put in the general Takaful or Takaful risk funds. So these funds are used for claims payment, also for the Takaful, claims payment for the Takaful, commission, and reserve. So these funds belongs to participants. So they are the one who contributed. So it will use that money to benefit the participant in terms of claim payment for the Takaful and also for reserve and commissions. But still, this money will be split into two. From the model which we have presented, that the fund will still split into two. The first party will remain in the pool to indemnify the customer, while the other party will be used to invest in order to increase the capacity of that pool. Because we know very well sometimes the claims can be more compared to the amount of money remain in the pool. So in order to make it to allow that operation flow well, so we need to invest that money in Sharia compliance. So these are the areas which we invest our money in Sharia compliance. So big portion of the money in order to increase the capacity of that funds. On top of these funds, we have also a fund from the shareholders, which we combine and we invest that money. So the Sharia compliant ventures, which is mostly those funds are invested in Islamic shares, Islamic REITs, crowdfunding, Islamic supply chain, sukuk, and fixed deposit. But I can tell you that here in Kenya, we are limited to invest in Sharia compliance. Mostly, we invest our money in fixed deposit, but we are in the process to identify other measures or other ventures which we can diversify our funds and to ensure that our return is high and it's Sharia compliant so that we can manage the risk fund very well. So from this investment, any return from an investment portion is returned to risk funds, which is belongs to the participant funds, and the other profit is returned to Takaful operators, whereby also it distributes with the shareholders. So still the profit which has been given to Takaful operators is also divided or distributed to the shareholder. There are certain portion whereby shareholder receive and also Takaful operator receive, whereby it is placed in the wakala pool. Then, when those funds from the risk fund, which we say that belongs to the participants, in case we have paid the claim in that year, and there are certain amount of money which remain in that pool, so that money is considered as surplus, and that surplus will be distributed to the participant, those who have not benefited from the fund in terms of claims or any other. Only those participants who have not benefited from the claim or any other are entitled to receive surplus. And the rest who have gotten claim, for example, they have an accident with their cars, so their cars has been repaired or replaced, so those are not entitled to receive that surplus. And for example, if we have paid the claim and nothing remain in the pool, So we are not entitled as Takaful operators to give out a surplus because we don't have. Unless now, for example, the funds were depleted before the end of year, so the only source of funds is through shareholders. Shareholders will lend to the pool a benevolent loan or interest-free loan, whereby the funds will be paid from the future underwriting amount or contribution, not from the surplus, because we are not sure if we can get surplus in the future. So we only compensated, or we only return that money to their shareholders, which they have lended to us through the future underwriting contribution, whereby we give them back the money. We are not allowed, as per Sharia principle, to borrow from the conventional bank. So the only source of income, or the source of fund, in order to um, to fill that gap, we borrow from the shareholders' funds. Then we return from that. So in case, for example, now the surplus were there, and we have tried our best to find or to look for the participants who are entitled for a surplus. As per the Sharia principle, we are allowed to keep that surplus for 5 good years. After 5 good years, if we haven't found the participants, we are required to return that amount of money or the surplus into the risk pool so that it can continue helping others. To add on that, Takaful operators also is entitled to receive a certain amount of money from surplus for, as call it, the cost, to compensate it for the cost, because we know very well that when it comes to looking for the participant, distributing or giving them checks, there are some cost which incurs. So we are entitled to receive certain amount of money as Takaful operators for that activity. So this is just a brief of our model, how we apply, and in case of any question, we are ready to address those questions. Thank you very much for your attention. Jazakumullah khair.
Thank you, Mohammed. That was quite an extensive, in-depth analysis. Um, we tried to see your presentation, but the network wasn't that good. Maybe
Wow.
you can share your presentation with us later so that we can be able to share it with the rest of the team and the
No
members who
problem.
have joined us.
No problem. I will share. No problem.
Asante sana.
Okay, terrible.
All right. Ladies and gentlemen, the next presenter is for medical or Afia Takaful. Mr. Hakim Musa, karibu. Musa Hakim, you're up next.
Thank you, Andrew. If you can confirm, I don't know if you're able to see my screen. I think you should be by now. So let me just get to presentation mode.
Hakim, introduce yourself.
Okay, Andrew, thank you so much and Mohammed for that elaborate presentation. I think as earlier introduced, Musa Hakim and the medical department. It's a good opportunity today to speak to you all and share what is medical or Afia Takaful. I think
Hakim,
in the market we are well. Yes. Andrew, you are speaking. I think your
I
mic
think
is
we're
on
having
mute.
a slight hitch on his side. It seems his mic is on, but his video is off.
Ah, okay. So, are you able to see my presentation? Hello, Andrew?
Ah, there we go. I can see you now.
All right. Are you able to see my presentation?
Take us away.
Are you able to see my presentation? I think, okay, I'll just proceed.
Yes, yes, we can, we can.
Okay, so I think most of the introductory part of what Takaful is all about has been covered extensively. So mine is basically to probably share a brief or summarized journey of what we've gone through in Afya Takaful. I think in the market we are popularly known on the general side covers, but one thing that is we also underwrite at Takaful is what is popularly known in the market as medical insurance. We started in 2015 as earlier presented by Calvin. 2015, that's when we were licensed and wrote our first business. And since then, we've been writing business for, I think, over 7 years or so in the market. So the product that we offer basically, as introduced earlier, is guided by ethical and moral principles. This is what basically is the spine of what Takaful offers in the market. And medical Takaful also, we try to underwrite and basically administer the product under those guidelines. Something unique that we need to know that in Takaful, we only offer corporate at the moment, but very soon, of course, there'll be some exciting news that will be entering into the retail space and offer what is popularly known as family medical or individual medical products, so to speak. So um, so in our model, we have three types of covers for the corporates. We have the corporate insured schemes, and then we have corporate self-funded schemes and corporate hybrid schemes. Corporate insured is basically where contributors or participants deposit contribution or what is known as premium, and then insurance is given unto them. Something that is very unique to corporate self-funded, where we have, which is the second one, is where a participant or a corporate deposit funds with us, and we are able to manage those funds with our expertise and also open up our panel of hospitals or doctors to them so that they're able to enjoy our expert administration skills. And basically, more so, this helps them not to incur expenses as regards to them just walking into a hospital or their staff members walking into hospital. The third one, of course, as I mentioned, is a combination of insured schemes and funded schemes. So we can easily combine these or rather curate and come up with a hybrid scheme where we have part insurance and part self-funded. Something also that is important for all of us to know. You'll be thinking out there, what is it that would make me be qualified for a corporate scheme under Afia Takafu? There you go. I hope it's on the screen, but I'll just basically take you through. Of course, the minimum for any corporate or an SME is 10 employees for us. So if you are 10 and over, you can easily get in touch with us. Of course, the numbers are there on the screen, but we'll be able to share them later. You can get in touch with us. We price you a scheme, and basically you'll be welcome to our company as well. Member eligibility or staff member for any corporate or chama. Of course, you should be an adult as a principal. Uh, that means the age bracket should be between 18 and 65 years of age. Children, of course, are covered as beneficiaries from 38 weeks to 18 years. This can be extended up to 25 years. Of course, this will be subject to any proof that we would require from you, or that would include learning, for example. The maximum joining age is 65 years of age. So between 18 and 65, as mentioned earlier, those members can be covered. Of course, where we've talked about basically the moral, the moral principle that guides the Afia Takaful. And there are certain uniqueness that are different from what we probably call it as conventional insurance and a Takaful operator. In this case, one uniqueness that stands out is for us as a company, because we are guided by Sharia. We accept female spouse, up to a maximum of 4 spouses that are recognized by the, if assuming the principal is a gentleman. Of course, the surplus declaration, which I'll not dive into so much because my colleague Mohammed had mentioned. And then, of course, it's a Sharia compliant medical. And more so, just to dive in, is that, of course, the moral principles, there are certain covers that we would probably take, and there are those ones that we avoid. Of course, the details being mentioned by Muhammad. Maybe being a medical cover, of course, some of the inpatient benefits that are popularly known in the market, those are things we take on board. Just as highlighted there, some of them like road and air evacuation. This, in case of an emergency, this is something that we offer. Lodger fees for children. Lodger fees is whereby you probably have a young one who's unwell, and as a parent, you'd like to stay with them at hospital. Of course, lodger fees are covered, and inpatient illnesses related to optical covered, and so on and so forth. We'll be able to share some of these slides so that there could be maybe those people who are interested in more detailed information on it. Of course, outpatient is covered as well in our corporate schemes. And the benefit ranges from consultation all the way to prescription and even vaccination to a certain extent. In our Afia Takaful, there are basically frequently asked questions. Some of them I've only highlighted two, but there could be more. Some of us would like to ask them during the question and answer session. But one of them is people ask, is Afia Takaful, or so to speak, is Takaful insurance only for Muslims? So to answer that, no, it's open to both Muslims and non-Muslim. More so for those people who are attracted or share the basic principle of moral insurance or moral finance. So basically, if you are attracted to this model, especially now that our Sharia manager has explained that, this is something that is open to you, so long as your nature of business is something we can take up. Of course, the other differences, as mentioned earlier, is surplus sharing. If, of course, there's a profit and it has been declared, we've declared profit and it is healthy for us to share surplus with the members that have participated in that scheme, we are more than willing to share. I think I'm done with my presentation. In case of any questions that are specific to this presentation, you're more than welcome to ask, or any other probably you'd have that is burning out there. Andrew, over to you. Thank you so much for having me. Andrew, I'm unable to hear you. I don't know if the rest are able to hear you.
Yeah, we can't hear.
Andrew, are you back? So I think maybe the next presenter can take off as you sort out the issue. I think you're
I
back
think,
now.
yes, Andrew has requested me to do the introduction of Victor. Hi, everybody. My name is Esther, Communications Officer at Takaful Insurance. Victor, the stage is yours. You can walk us through the Takaful Umbrella Fund. Thank you.
Okay, thank you, Esther. Still good morning. Can't tell that if my screen is visible. Tim, is my
Yes, your
screen
screen is
visible?
okay. Yeah.
Okay, good. Good morning, everybody. By name, I'm Victor Mokua. I'm on the pension team. Here at Takafu, we also have a pension offering, and it's something that we will seek to share with yourselves today. In the brief presentation that we're going to have, I will seek to do 3 key things. Number 1 being just to debunk and explain the umbrella fund that we have, the pension offering that we have, how it is structured, and how it is offered in the market. So that is one of the things that I will seek to do, debunk it, just to seek to explain it. Number 2, showcase the strength of Islamic finance and what it has been able to do, especially in this area, because we are doing long-term investments in terms of the pension fund that we have. So the number 2 thing that I will seek to do, showcase the strength of Islamic finance, even in this space of the pension area. And number 3, just to seek partnerships with yourself, call it a business marketing aspect, as we seek clientele to join this fund. So I believe those 3 key things showcase the strength of Islamic finance, debunk the fund, and try to market this fund. I will take us through the presentation. Of course, Takaful has been explained. So Takaful carries out the other Takaful products, and then we have the umbrella fund, which is a unique offering in this space. As we try to offer all these products to especially our Muslim clients, we do recognize that this is an ethical offering, and so it is open to all and sundry who would see value in it, and we believe it is really valuable to everybody. And then we will speak about the benefits package. Using the RBA statistics and the slide that I put on, we can see that the pension industry now sits at around 1.5 trillion in terms of assets under management. Now, historically, remember, the banking industry holds the biggest pot of money in this country. Then it was insurance companies. But we can slightly see that pension companies are now overtaking the insurance companies in this space. And consider this is as per reform starting around 1999, around late 90s, coming into the early 2000s. So the pension industry is a latecomer in this industry, but we are seeing the assets under management quickly picking up and stabilizing itself as a big pillar of the economy. Of course, in terms of numbers, the pension industry continues to grow, around 1,200 pension schemes. There's so many pension schemes in this country. But the biggest statistic that is problematic, just like on the insurance space, is the number of uptake. The uptake levels are pretty low, and as you will see, less than 30% of the country is covered by retirement benefits. Retirement benefit schemes, or very few of us are in pension schemes, around 1.3 million employees only in the various pension schemes that are out there. Now, this speaks to a very big problem, because retirement will definitely happen. Retirement will definitely come. The Kenyan retirement age sits at around age 60, and then you see in terms of life expectancy, in as much as it is 67, most employees who've been in the workforce, in the active workforce with good healthcare systems, are definitely going to live up to their late 80s or 90s. So it presents a big challenge as to how they're going to fund that in their retirement. So it now behooves us that we start to think around some of these issues, getting into this space. And that is why primarily the Takaful Umbrella Fund came in to fill in a necessary gap. A lot of and here I will be very careful, and not just to speak about Muslims, but a lot of people who consider ethical investments have been left out of this loop. And that is why Takaful Umbrella Fund comes to fill in this particular niche in the market. So offering ethical investments in this space, in terms of the processes, in terms of the investments, and even in terms of the eventual payout of the benefits. So while it's a big industry growing, it is funding a lot of infrastructure projects in the country. It is holding a big chunk of the money in our stock market and in the bond market. We can see that pension funds, still the uptake is pretty low, and so there is much groundwork to be done in this space. Now, Takaful Umbrella Fund was started in 2000 2008. Now 13 years into operations. We've been in the market for that period of time. So far, it has been good. Much has happened within that period of time. There have been a lot of learnings, a lot of experiences out of it. The fund that we run currently has around 1,500 members and growing. In terms of the asset base, we are around 700 million in terms of assets that we have in the scheme. Remember, pension schemes are set up as separate legal entities from the companies that found them. So it is a company on its own, holding its own assets, having its own board, having its own service provider, and that goes on to provide a lot of governance issues and inbuilt ring-fenced so that in terms of its asset, it's protected, and so that it's able to meet its eventual payout promises that it has offered its clients. The main function and the focus of the board of trustees that we have here at Takafu is in terms of stability of fund. Stability here, we are talking around just ensuring that people's money and the promise that we've given is upheld and kept. So this speaks much deeper in terms of the procedures that we have, in terms of the investment avenues that we have. And the number two things that we are cognizant of is in terms of the returns that we offer our members. We know very well, yes, deductions happen from members, there are tax incentives that happen, but we also need to offer a return that is above inflation, so that at least we're able to grow that pot of money, so that when one retires, at least the outlook is far much better. Customer service goes in tandem with that, because you see here we are dealing with people's money, and so people need hands-on information on a readily available metrics. So customer service is at the top line of what we offer, and that will come in as we speak about the service providers that we have in this fund. So just to look at the fund, of course, malipo ya uzeni, as we talk about it in Swahili, is something that all people in the workforce should be cognizant about. From the first point that an employee is engaged in any outfit, in any particular organization, retirement benefits should sit at the top of their minds. Because one thing that we've now come to realize, people live longer in retirement. There will be, of course, financial implications in retirement in terms of the medical healthcare, in terms of housing, in terms of just general upkeep. Considering again that people nowadays are bearing kids much later in life, so schooling may even go past retirement age. So there's a lot of burden on retirees to sustain their families, and in the African context, by and large, the extended family that we tend to live with. So there are lots of retirement goals that we have. People are now traveling the more, people want to see more places, and people are doing extravagant things. So retirement now needs a lot of planning and foresight around that. I love the old adage that goes like, if you fail to plan, you're simply planning to fail. That is very simplistic, but it's very powerful in nature. And we see it on and on every other year on. Even looking at the various circumstances that we're looking, you see COVID was announced in March 2020. Here we are now 1 year, 6 months down the line. So time has a way of moving very fast, and retirement normally catches up on people. So these are very critical questions that anybody should ask themselves when they are working, so that they do not eat the whole pie and forget the essence of what is coming there in the future. Just to move on in terms of the presentation, we know that the structure of the fund is structured this way. An umbrella fund ideally is marketed to the SME market, to the small and medium enterprises, even to the micro enterprises, to the NGO sector. These types of funds, and there are various umbrella funds in the market. Umbrella funds they feel a unique space because they fill in that gap whereby an employer does not want to engage themselves in the nitty-gritties of setting up a fund, so they would rather outsource it. So the fund looks as displayed. There is the fund itself, set up by a trustee and rules, which is filed with the regulators, RB and KRA for tax purposes. There is a board of trustees who are regarded as the owners of the fund, who have oversight mandate of the fund, exercising fiduciary responsibilities just to ensure that members get their rightful benefits as and when required, that investments are done in the right manner, and that on and on matters are handled very well. So there will be various participating funds who have a shareholding in the fund, and then there are various service providers in the fund. First of them all is the administrator, who does the day-to-day handling of duties in the fund: onboarding members, processing withdrawals, member communication, attending to AGM issues, member trainings, financial literacy, and all of those issues. At the particular moment, we're using Minet Africa. Minet have a strength in this area in terms of their systems. So we're able to ride on their online portal so that members are able to view their statements and interact with their system so that they are kept abreast of how their finances are growing so that they're not in the dark on that issue. We have a custodian bank who ideally collects contribution and does the payments out as and when they happen. They also hold the assets of the scheme, the share certificate, the bond certificates, and they keep all of this in custody. And then we have the fund manager whose work is to shop out for active investments in the market, identify them, analyze them, and then present them to the board of trustees, who will eventually make a decision. Now, because this again is a Sharia fund, there is an overlay of the Sharia Supervisory Council who, on a continuous basis, cross-check in terms of the activities and the affairs of the scheme to ensure that just we meet the promise that we have. The fund is audited on an annual basis. At the moment, we are using PKF Kenya, and then there are various legal advisors and the Sharia compliance angle to it. So that is how, in simplicity, how the fund would look like. So a participating employer would find it easy just to come in a structure that has already been put into place and exist and run in without having the legalities of having to undergo the whole process of it. Now, just to speak again, the market has been slow in terms of service providers, getting service providers who I would say have Islamic finance expertise. So what it means with the service providers that we have, we've had to teach them, coach them a lot in terms of our processes. And so there is always a close monitoring in and around the activities that we do. Just to continue in terms of the slides that we have, the fund has continued to have year-on-year growth in terms of the assets under management. Now, one of the things that we'll admit, part of our Mombasa group where we had a huge chunk of the business was affected by a lot of retrenchment work that happened, courtesy of the SGR coming on board. So a lot of the cargo freight services had to offlay a lot of people. And that is one success story where we've been able to pay out close to 200 million in terms of pension benefits to some of the staff who were retired involuntarily, these issues that came up. And we must admit that most of those staff are very grateful because you see, initially they were probably forced into the scheme, and here they were facing retrenchment without any prior plan. So it came out as a good benefit package for them, even as they exited. In terms of the membership, in terms of the returns, the fund has continued to year on year grow strength by strength, as you will see from the slides that we will share with yourselves. In terms of the fund, in terms of the scheme features, our fund is structured as a provident fund. Provident in the sense that it means it pays off a lump sum benefit. A lump sum, we will pay you whatever amount of money, your contribution plus your employer contribution plus the profit return into the fund, that will be paid to you as a lump sum, less the applicable taxes that have been applied. Of course, in terms of tax incentives, government has given pension funds a lot of tax incentives in terms of the contributions of up to Kenya shillings 20,000 on a payslip are tax exempt. So let's say you're contributing 10,000 from your payslip, you will enjoy a tax rebate. You will not pay tax on that 10,000. Once the money comes into the pension scheme, again, in terms of the investments, pension investments are tax exempt. So again, you continue to enjoy the tax exemption. And at the payment, when you pay, yes, government will require a little bit of taxation, but at preferential tax treatments. The law allows at age 65 monies to be paid tax-free. Of course, there was an anomaly in the last regulations where it came out that tax at age 65 was reintroduced, but there are discussions around removing that so that members continue to enjoy the tax reliefs at age 65. This is a defined contribution scheme. What it means is that participating employers will decide what kind of rates they want to contribute. Of course, using the NSSF metrics where the 6% contribution was more or less the floor, we are using those rates, but there are employers who contribute rates of up to 10, 15%, but the bulk of them are around 10% either of the basic salary, and then the employer matches on that. It's an umbrella fund, so it is not an occupational, it is not owned by one entity, it is owned by all the participating employers. And then the retirement ages will again be chosen by members on a free will. Now, Members are also free to do voluntary contributions, and voluntary contributions, additional, we've seen an uptake in this. Of course, ideally starting in the third year when members have been in the scheme, because generally what happens, initially employees and employers are normally hesitant to join pension scheme. But once they start seeing the fruition of and the growth in their member statements, a lot of people now change perspective, and they regard pension savings as the worthwhile methodology to save for the long term. In spite of all these others that are there, the circles, the money markets, pension funds have been resilient year on year, and that is why they are winning big in terms of the monies that are coming into place. Moving forward, some of the participating employers that we have in the fund, some joined as earliest at 2013. Takaful was the earliest onboarder into the scheme. We have various partners in the Islamic front, and non-Islamic front also, the likes of Umma University, the likes of Has Petroleum. In Mombasa, we have the likes of Spearship, East African Gaswell, Frontier Optical, and all these participating employers have been on board. There are two hospitals, Metropolitan Hospital, Ladman Hospital, and then we have also Mewa Hospital from Mombasa. We continue to reach out to any other employers who are out there who are seeking for a retirement benefit platform to save, that they can easily reach out, and we believe we will share our contacts. It is a very easy, painless process which we will guide yourselves in. We will have various sessions with yourselves and staff engagement, financial literacy courses, so that you are able at least to appreciate where the fund has come from, the methodology, and even talk to some of the other partners that we have in the fund, so that you can be able to appreciate and easily onboard the scheme. Just to move on, what is the investment policy? Because this is the key area that the fund is involved in. Now, Sharia compliance is the number one promise that we give our clientele. We do realize that most of our clientele are constrained in terms of investment avenues wherever they may be. So if you're an employee in a certain organization and you feel that the scheme that you have is not working for you, does not adhere to the ethics that you're involved in, this is our number one promise, that the investments that we will do, and at our annual general meetings, which are held every other year, in conjunction with the fund manager, we will explain where the returns that we've generated, where they are sourced from. But primarily, ideally, we've been partnering with the three Islamic financial institutions, the banks, Gulf African Bank, DIB Bank, and FCB Bank. And we've been partnering with them in various ventures, in one Sukuks, in the fixed deposits, in the call deposits. So those investments are pretty Sharia coming out of these partners that we have. Capital preservation. Now, this becomes a big ticker, because you see, every other shilling that an employee is deducted and remitted to the fund should be there as and when an employee attains the age of 60 or early retirement age of 50. Capital preservation is key, because early in the 90s, and out of the Kenyan experience, people have had very bad experiences in terms of pension schemes, even in terms of other investments that they've done out there, in terms of loss of money. So capital preservation comes out as key, and you will realize that Islamic finance is generally not very, in terms of the risk profile, not very aggressive. We are slow. We need to understand what we are investing in, and there needs to be the underlying asset that preserves the fund. So capital preservation is also a key consideration. Maximization of returns, so that we beat inflation, so that money at least is in tandem with the investments, also needs to happen. And I am happy to say that Islamic finance has worked. It has been resilient over the last 13 years that we've been in operation. Year on year, despite the upheavals, the ups and downs of the stock market, the bond market, the pension fund has been pretty resilient over the years. And even as we go into an election year, we are pretty sure that we will be able to weave through, and the scheme will be able to generate the above inflation returns that we've been able to do. Of course, not going overboard and not stooping so low. We are on a good trajectory that I think is in tandem with the expectations of our members, and we've been able to meet that. Of course, diversification becomes very key, that we need to put money in different pockets, so that we protect the fund from any eventualities that happen, and comply with the regulators' requirements when it comes to pension funds, because again, the regulator is checking out for the benefits of the members, and RBA has been very keen in terms of this area, just to ensure that we meet that promise. As we come to the tail end, what are the benefits to prospective clients, to yourselves, or to any employee? Every other day, we get calls for an avenue to save in a Sharia compliant way. And this is the promise that we give through our fund, through the unique fund that we have, through the processes that we have, and through the avenues that we do in terms of investment. So that one, especially for Muslim, it sits with them very well when they are participating in this fund. Number two, the fund is professionally managed, hence minimal employer involvement, so that the employer is able to focus on their core activities, and the employees are also able to get their statements on time and to get their payments on time as and when they are done, so that and part of what we do is cross-check on terms of our service providers, just to ensure that this promise is high at that level. This comes from the board in terms of the SLAs that we have, that money should be refunded as quickly as possible, investments happen as quickly as possible. The fund is registered with the KRA just to ensure tax exemption happens, and the fund is a DC scheme, defined contribution scheme, so there are no it's an open-ended liability, so there are no penalties, there are no taxes. It's an easy scheme to get in, to get out, to work through. So there are no constraints around it, there are no limitations, there are no penalties, and all those issues are not there. It is very easy, simple, and cost-effective. There are no entry-level requirements that are required. We will participate with yourselves to take you through the whole process just to make it easy and all of that. The benefits, of course, are also very simple to be understood and to be appreciated. And we keep on having investor briefing sessions, member training sessions with all the participating employers who are in the fund. What is the joining process for any particular entity that would wish to join the fund? Number one would be, we would, of course, come and do various presentations to yourselves, to your boards, to your members, and then we will require your certificate of incorporation as an entity, just to register yourselves, and of course your KRA PIN and other KYC documentation from yourself. As an employer, you will need to sign on behalf of your employees and onboard them. You will need to sign a deed of adherence. This is the legal instrument that adheres yourself to the trust deed and rules. And then members are free to fill in the application form and nomination of beneficiary forms. Now, we believe most employees, once you are confirmed by your participating employer, you will be able to join the fund. And this normally means from age 18 onwards, members are free to join the fund because they are now of majority age. Of key consideration is normally the nomination of beneficiary form, where members are supposed to highlight who their dependents are and beneficiaries in the eventuality that they may pass on in the process, because pension funds are long-term investment, anywhere from 15 years to 30 years. So the nomination of beneficiary comes in. At least with most Muslims, we have not had a challenge with them most of the time, because Muslims, the law of inheritance permeates, and it is an easy process just to pay out the benefits. And then, so once all this documentation is in place, members are free now to start contributions, and deductions can happen into the fund. Heading to the last slide, in terms of the value proposition, why we think Takaful Umbrella Fund is the fund to be in. We are primarily the first pension provider which is underpinned with ethical consideration. Talking about ESG consideration that have come into the market, we are one of the first, and so we have a track record around in that process. In terms of the returns, looking at the comparative table that we've shared with ourselves, we compare favorably with the conventional space. Of course, they are more aggressive, but on the long run, looking at the 8 years that we've been in operation, we believe that eventually on a 20-year yardstick, we will be doing much better than them, because when we remove all the prohibitions against interest, gambling, speculation, and trickery, all those issues, our fund definitely, with a bigger pot of money, will be able to reach out into deeper investments and therefore be able to generate the returns that we sort of like. Again, we are looking at the brick and mortar type of investments, gated communities, housing complexes, and that is the long-term view, and we believe that it will be able to sustain an above inflation rate. We are on this 10% trajectory for the last few years. Remember, again, this is a fund that we've been building, so on and on, it's been doing very well. In terms of the investment type, we are on the segregated space, and what simply that means is that all the returns that we make, less the allowable expenses, these are the fees to the service providers, all the other returns come back to the member. So there are no issues around preserving and what we find in the conventional insurance space. Members get all the returns that is due to themselves. In terms of safety, Islamic funds globally have been shown to be more secure because of the underpin of the invested assets that are there, verifiable and quantifiable, and there are no associated costs with it. Viewers, it's my hope that I've been able to share a lot of information around this fund. I've been able to explain the Islamic finance and showcase that it is vibrant, and it is my hope that at least we can have further engagements as we go along, and that we will probably have reach outs from yourself to have just sit-in sessions just to try and understand how the fund is performing, the ins and outs, and that is our offering for today, and we are grateful for this opportunity to have presented to yourselves. That marks the end of the presentation, and possibly through our coordinator, we will get the questions and we will be able to answer them after the other presenters have gone through. Thank you very much. Andrew, possibly you can take it back and move on to the next into the next presentation. Asante sana.
Good afternoon, team. Honorable dignitaries, distinguished guests, our Chief Executive Officer and all participants, I'm Said Abdul, and I'll be giving the vote of thanks on behalf of the Takaful Insurance of Africa, its entire fraternity, and the organizing committee. It with immense pleasure that I take this opportunity to offer our vote of thanks to first Mr. Andron Duarte, Business Development Manager in charge of bank assurance, for hosting this webinar. AIIK, Calvin Kebaso, Branch Manager CBD Branch, who spared his time to grace this webinar and take us through the organization structure and background. Mr. Mohammed Alidin, our Sharia Manager, for taking us through the Takaful Sharia concept, its uniqueness, and its benefits to the society. Through that, we have also been able to learn about the Sharia concept and also the when, how, and what's of surplus sharing. I'd also like to take this opportunity to express our deep gratitude and regards to Mr. Hakim Musta, BDM Medical, for taking us through the Afia Takaful, its uniqueness and benefit. And also he has been able to share with us the background of Afia Takaful and also some of the features, which we are happy to hear that he has clearly stated that currently we are offering corporate products, but in the near future we'll be joining the retail space whereby we'll be able to provide individual covers. He has also been able to tell us for the employers seeking to join our Takaful, Afia Takaful, what incorporates the corporate, how the Afia Takaful works and its benefit, uniqueness more so when it comes to adding all your postpals according to the Sharia, according to the Islamic Sharia. I'd also like to share my regards with Mr. Victor Mukua, our Business Development Manager in charge of pension, for impacting us with his knowledge on Takaful umbrella, its uniqueness. And I can say that his presentation has been informative, in that we have been able to know about our pension, Takaful pension, the need for ethical investments, the strength of Islamic finance in the global market, the need for you as our customer to uptake and join our our pension scheme, the stability of our pool and its returns, and also we are able to know that not only are we governed by the national regulator, the RBA, but also the Sharia council that we have. We also wish to thank our Chief Executive Officer, Madam Somaya Hassan, for her support championing this webinar and providing guidance as a portion of this webinar. Our deep sense of appreciation and thanks to all the participants who choose to be live with us and attend the webinar with great enthusiasm and made it a successful event. Our sincere gratitude also goes to the organizing committee for making this webinar a success. Last but surely not least, I thank our IT team for the technical support. Once again, I thank you for being with us on this wonderful event. Have a lovely day. Thank you. Mr. Ndwati maybe will be now able to handle the Q&As. Thank you. Since we can't find Mr. Ndwati, there is a question that I can see here that has been channeled to our medical team. Our medical team has been asked to share the list of hospitals that we have in our panel. Kindly, Mr. Akim, take us through that.
Thank you, Said. I think the question also, over and above the list of hospitals, the question asked was, in the list of hospitals we have, do we only deal with the ones founded by Muslims, or are we open to all? Thank you for that question. I think it was asked by a gentleman called John Olukaye. Thank you, John, for that question. In my presentation, I think I didn't mention, it was only brief on concept and model. So yes, as Afya Takaful, we have a panel of doctors, and it stretches across the 47 counties. And additionally, we have in our panel both premier hospitals and the tier 2 hospitals. That means when we talk about premier, these are hospitals that include the likes of Karen Hospital, Aga Khan, and MP Shah, that kind of hospitals. So I think by way of mentioning that only shows that our spread in the partners we have in order to offer Afya Takaful does not restrict on on ownership or shareholding. So yes, the hospitals we deal with, we do not discriminate whether Muslims or non-Muslim founded hospitals. The whole idea is actually to get the best for our participants. So basically, in order to get the best service, you cannot look at paneling, introducing a hospital on the panel on the basis of faith. I think also it borders more so on the way the product offering that we do for Takafu, that the product is open to both Muslim and non-Muslim. What, of course, is unique that makes our product, our product offering is the Sharia compliance model with which we run the schemes. So I think I've answered you, John Olukai.
Thank you so much, Akim. I think I'll take on the rest of the Q&As for the team to distribute to the team. I think Mohammed Ali Deni, there was a question for you. What kind of Takaful principal mix do you operate on? I think you touched on this. I think somebody missed it, but feel free to answer. Take that one.
Okay, thank you very much for that question. Okay, in my presentation, I forgot to mention those principles which we apply. You know very well in Takaful, there are not quite a number of principles which applied, like Mudaraba, Wakala, which is agency, Ta'awun, which is helping each other, and also Wakfu. So you may find that different company either apply one or combine two or more. For us as Takaful operators, we combine four types of Sharia principles. We have Waqf, we have Wakala, we combine with Mudaraba and Ta'awun, which is form of donation. For Waqfu, it's just the first part of our model, whereby portion of the capital is paid by shareholders, combining with the contribution which is paid by the participants. So in the concept of work, it means once you contribute in that pool, you are not allowed to recourse that amount. It means you have already donated and it goes to benefit others. So that's the Sharia principle. Then there's another part which is called the wakala. So we apply that to wakala because Takaful operator act as an agent for the participant who manage that fund. So it is entitled to receive a fee, call it agency fee. That's why we charge certain percentage of the contribution paid by the participant as a wakala fee. Then we have another part which is called it ta'awun. So as we mentioned that risk funds, portion of that risk funds goes to a form of ta'awun. It means when the participant contributes, he intends to help other participants in case of any calamities. That's why sometimes you may have that motor vehicle covered by Takaful, but Alhamdulillah for the rest of for the whole year you have not gotten any risk. So I know in principle we have to return that money, but since you have already intended to donate or to help each other, that funds, even though it won't help you, but it has already helped other participants, and you get rewards from God for that good heart. Then another part, it is now Mudharaba. The Mudharaba plays the role of investing that funds. As we mentioned that the funds, in order to increase it, the pool, we have to invest in Sharia compliant. So that forms the part of the Mudharaba, whereby the profit generated from that investment is shared between the participant and the Takaful operators plus shareholders. So these are the four principles which we combine to form our model, and these four principles are Sharia compliant, and no doubt in that. Thank you very much.
Thank you so much, Ali Dini. I hope we're still getting more questions. I think I have one for Kebaso from Josephine Njero. She asks, what interest rates are you offering this year? Interest rates.
Esther,
What interest rates? Yes.
Esther, I'll take that one because I think it's on the pension end. Actually, I've seen like 3-4 questions. One is
fantastic.
on the one is on the entry age for joining the pension scheme. Now,
and the maximum age, age also.
Yes.
Okay.
I believe it is Amina. Now, Amina, this fund it's marketed to employers, ideally to the SME market or the MSME market, the micro, small, medium enterprises, or to the NGO sector. So it is not an individual pension plan. We are not yet in that space in the individual pension plan. So it is marketed to employers. So as long as you're a staff of a particular entity, you are entitled to join the scheme. That can be as early as age 18 or 25 when most employees start. Now, in terms of the retirement age, that is dependent again with the organization. Most organizations' retirement age is 60, but some have early retirement age of 50, and some also have late retirement age. Doctors, lawyers, judiciary as late as even as age 70. So that spectrum occupies there. So, but remember, this is marketed to employers, and we are looking forward to starting an individual pension plan because that has kept on coming from the market. In terms of the returns that we are looking at giving for this year, 2021, and again, remember again, being an ethical fund, it's not an issue of interest rates, but it's an issue of profit. It's an issue of growth out of the investments that we've done in the market. We are not an interest-based organization coming out of Alidin's proposal. We invest in verifiable, quantifiable asset classes, and out of the growth or the fees that we charge out of those, that is what we pass back to the members. Looking at our numbers from Q3 that we posted, at Q3 we were around 7%. I believe at the close of the year, we may be at around 10% trajectory, of which we've been operating in the last 8 years. Remember, again, our fund is by and by pretty small. So being able to punch such kind of a number is pretty commendable, and that speaks to the work that the board of trustees and the fund manager are doing just to ensure that return comes out. Now, as a fund, again, we are what is called a segregated fund. Now, here, if you're comparing ourselves and a conventional player, most insurance companies out there operate what are called guaranteed funds. They would give you a minimum return, either 2 to 3%, and say we've guaranteed that kind of return. And then after investments at the end of the year, they would give a bonus return. Now, while that works for most people, in Islamic finance, we don't work with guarantees. All the returns that we make, we pass over to the investors, to the participating employers. And here I would also like to say, and Aladdin will speak to this, Islamic finance speaks to the fact that in terms of profits and in terms of losses, there is equal sharing around that scope. So just to summarize, we are on that 10% trajectory. Hopefully that is what we will close. Our costs are pretty minimal. We will share the presentation. You'll be able to see the comparative between us and the conventional players out of the market survey that is normally done. The challenge with most conventional players is that when they make a lot of money, they pay themselves so much in comparison with what they give back to the funds. So that is one differentiator, because for us, it's a requirement that we pass much returns back to the members. There's also a question in terms of medical covers for members above age 65. I know Hakim will speak to this, but in terms of the pension sector, what is happening, we now have what is called post-medical retirement, PMRF, post-medical retirement funds, where members of particular pension schemes can also start contributing towards their retirement medical fund, as they contribute also with in tandem with their retirement benefits. There's also a inbuilt mortgage product that I believe as we go along, we will be able to explain. So in terms of the medical covers for retirees, an employee in their active working life can be contributing towards that. While we do understand that most retirees may not have had that opportunity, various players in the market, and I believe even Takaful will follow suit and come up with that opportunity for a medical cover in retirement. And then the last question, what is the minimum and maximum amount that one country contribute to pension? At the moment, because again, as I said, this is employer based, so we are working with rates. The minimum contribution rates can be around 6% for the employees and 6% matching for the employer, but these rates can vary, and we can have a one-on-one discussion to discuss on the merits in terms of budgets, because again, there is the issue of income replacement, what you're targeting at the point of retirement. So I believe those were the questions to the pension end. Back to you, Esther.
Well covered, Victor. Thank you for that. I think I have a question for Hakim from Bernard. Bernard asks, on the Afya Takaful, the maximum age of cover is 65. Most people start really requiring health covers after 65. Where does that leave the other half of sexagenarians and above? Hakim, what do you have to say to that?
Thank you, Esther. I think that's a very good question on how, because I've mentioned the maximum age is 65, but you probably find situations whereby you have people or customers or employers who have people beyond 65 years of age. Of course, definitely, these ones can be covered, but normally there's a special underwriting treatment because we look at them as a risk, a unique risk in itself. So we normally subject them to one or two possible underwriting or risk assessment guidelines, after which we review the report and apportion the premium that is equivalent to the risk that we've been able to determine. So definitely members can be covered over and above the 65 years of age, but they'll be subjected to an assessment of sort to determine their insurability. I think there was also another question. I think it was asked by one of the participants by the name Amina. So is the cover, I think it's Afya Takaful, is it for only corporate, and can an individual join or as a family? Yes, at the moment, the license that we've been issued by the regulator is for corporate only. However, in the coming few months or so, we are excited probably to be introducing some of our individual covers, and one can actually now join as an individual, or they can join with their family. So yes, at the moment we cannot underwrite, or we cannot issue policies on for individuals. I think there was one other question. This one is a general question, probably in terms of the risk. I can take it on behalf of Kebaso. So Josephine asked, how do you become an agent of Takafu Insurance and the requirements? So there's a particularly steps on how to join. We can drop our contact. This is for Said.
I think I'll take that.
You can take on that.
Good afternoon, Josephine. Thanks for showing first the interest to work with us and join our great Takaful team. For one to be an agent, we normally share a Takaful application form, and then we'll need certificate of registration or a certificate of incorporation for a business. We'll need the national ID for the directors or the principal officer. There is also current registration certificate as an agent issued by the Commissioner of Insurance, COP certificate, and in case maybe you have some exemption papers. In this case, I'm talking about, let's say, if you have papers in actuarial science, you can be exempted, or you have done a diploma in insurance. Also, what we need is a copy of the PIN certificate of the member. Over and above that, we'll have to attend a training session so as to understand the Takaful concept. But I believe from today's webinar, at least you have understood one thing or two about the Takaful concept and how it works. Thank you.
All right, thank you so much, Saidi, for handling that. I think I believe most questions have been answered. We have one more that Mohammed Aladini, perhaps that is directed to you, which is by John Olokonya. He says, what formula do you use to make sure that contributors benefit from profits realized? Do you pay the clients, or do you give discounts to the renewal?
Okay, thank you very much for this good question. As we mentioned that from our investment, any profit that we generate or we receive, it is divided in the ratio of 55 to 45. 55 of portion of the profit goes to 55% goes to the participant, while 45% goes to the Takaful operator. So this 55% now is returned into the pool to assist or to increase the quantity of the pool so that it can benefit the participant, while the 45% is now distributed between Takaful operator and also the shareholders. As we mentioned that shareholder may also invest some funds with Takaful. So that fund invested by shareholders is entitled to receive a portion of the profit. So that 45% is now split or divided between Takaful operator and the shareholders. But the 55% return to the pool to assist or to benefit the participants. Thank you very much. But in terms of, discount, okay, we can do that, or I don't know if it is applied, but it's a good concept. It's a good concept. Maybe we can agree with the customer in case the customer has not, benefited from the claim or whatever. We have that principle called the non-claim discount. We can apply that one for those customers to encourage them to be members of a Takaful company. Thank you very much.
Thank you, Mohammed. Lerini. I see our host is back, but I'll check whether we have any other questions left before we do a quick poll as we look to wind up. As to wind up, I think Victor took the rest. With your permission, Andrew, allow me to run a quick poll just to get the feedback of all the participants of our webinar today. It's very easy. The question is, was the webinar helpful? We have three answers. Yes, it was. Not at all. Or I need more information on Takaful. And because we did all register and we have your contacts, we are able to reach out to you if you need more information. But as you take the poll, just take a minute quickly. Let's wind up the poll, and I'll be handing it back to you, Andrew. We'll give it a minute, just quickly, just before we close the poll. So far, so good. Feel free to give us information. I see 3 people want more information on Takaful. We'll definitely be reaching out to you after the webinar on email. Then you can tell us what information you want. Remember, Takaful, we are open to all. We're happy to give you covers. Our website is open. That is www.takafulafrica.co.ke. Our Instagram, Takaful Insurance of Africa, on Facebook, Instagram, and Twitter. We're also on LinkedIn, across all platforms. Feel free to reach out to us, and we're happy to help. If you want to call us, our number is 0703 80 80 10. 0703 80 80 10. I think we've given good time for the feedback. Thank you so much for all those who participated in our poll today. Those who need more information will definitely be getting back to you. I'll hand this back to Andrew to perhaps wind up. Saidi had already given us the vote of thanks, if I'm not wrong. Back to you, Andrew. Andrew, I think you look like you're speaking, but we can't hear you. I'm not sure that's only on my end.
I can't hear.
Yes, Andrew, we cannot hear you. I think you're having a mic challenge. I think I will. Can I wind up on behalf of Andrew?
Yeah, I think he's
Yeah,
having
yes, please.
trouble with his mic.
That's okay. Thank you so much for your time, for taking your good time to participate with our TIA Masterclass Takaful webinar. This has been our time. Until next time, we'll be looking forward to interacting with you, to getting business from you, and we're happy to give you excellent service. That's about it. Do have a lovely, lovely day. Be blessed.
Thank you. Masalam.
Thank you, Masalam. Goodbye.